Hiya. So, we spoke about the £10 note, okay, received in exchange for a deposit of gold. And in order to really paint clear to you the failings of this thing we call banking, I want to ask you to hypothesize about a scenario where we are literally just starting things off. In other words, there's no money in circulation at all, right? There's no such thing as money. Let's just imagine that for a moment. And then all of a sudden we decide to bring this thing into being called a government, and the government decides that it's going to borrow £100 million in order to kickstart this thing we call society, and they're going to build some hospitals, they're going to build some roads, and they're going to build some schools. Alright, you with me? Cool. So, the government decides it wants this money, it wants £100 million. And so what does it do? Well, it picks up the phone. This is the way it works at the moment. It picks up the phone to the Treasury, and the Treasury pick up the phone to the central bank. And over here we call that central bank the Bank of England. But I want you to understand that the Bank of England is not owned by you and me. It is in fact a privately owned business. Okay? So, Treasury picks up the phone to the Bank of England and says, hey guys, we need £100 million. Can you please send it over to us? And the Bank of England say, no problem, right? No problem whatsoever. We'll get this £100 million over to you. There's just one stipulation. We're going to charge interest. 1%. We're not greedy, just 1 measly percent. Cool, we all think. 1% doesn't sound bad, does it? Okay, so the Bank of England get their printers on the case, and the printers start running bits of blank paper through their printing press, and it comes out the other side as the banknotes you and I love. Yeah? And so we have £100 million worth of banknotes, and this £100 million worth of banknotes is the only money in circulation. Okay? Cool. So the government then spends the money, and the schools get built, the hospitals get built, the roads get built, and the workers and the architects and the engineers, they all get paid, and that money starts doing its rounds throughout the economy. Okay? And then slowly but surely over time, the government, through taxation, collects all this money back, and it's now got its £100 million back, ready to pay back the loan. So it sends the £100 million worth of notes back to the Bank of England. And the Bank of England then says, cool, thanks very much guys, where's our interest? Where's the interest? Well, more to the point, where's it coming from? Because the £100 million worth of banknotes that the Bank of England created have just been sent back to them. So I've got nothing in my hands to pay back the interest with. So where's the interest coming from? Well, the interest is going to come from repossessions, bankruptcies, and real asset, real property, real things that you can touch, right? Like this mouse, real things, yeah? But did you notice the magic of that transaction? Because there's a lot of magic in that transaction. First and foremost, if we fast forward to today, okay, the Bank of England, okay, yes, it creates notes, or it or whoever does it as on their behalf nowadays creates notes. We know that we see notes passing around. But moreover, the Bank of England actually creates the money that it lends to government in the form of electronic funds. Okay, so digits on a computer screen, or in this case, digits on my calculator. So if I tap in £100 million, and did you see how long that took me to do that? Okay. When the Bank of England receives that call, it taps some digits into a computer system. And the only difference between this calculator and the Bank of England's computer system is that my calculator's not rigged up to their computer system. But the digits are the same, are they not? Yeah? So what we have to ask ourselves with regards to that transaction, and this is just one question, is why would the government agree to borrow money which is created as easy as that? Yeah? Why would the government agree to borrow money created in that way on which interest is going to be charged, whereupon the interest can't be repaid. The only way it can be repaid is to give up real asset. But the problem is, look at what the Bank of England, had to do to create the loan in the first place. I merely went like this. Do you think that's fair? Secondly, when that loan was taken out from the Bank of England, the government had to give a guarantee to repay the loan, okay? And it does that in the form of a bond, okay? Now the bond, you can construe that, as I say, of being a guarantee. You could construe it as being like an insurance policy. It's the Bank of England's insurance policy that it's going to get paid back. It's a security, all right? It's the Bank of England's security. Well, what does this bond tie up? What is it what is it that's bound by this bond? You and me. Okay? That's what's bound by it. Your sweat equity, your hard labour, and my hard labour. But again, the question is, just for tapping a few digits into a computer system, is it really that fair that the working population of this country should have to go out and engage in hard labour in order to pay back thin air? Is that right? Is that how it works? And then when we can't pay the interest on this thin air, we have to hand over real assets. And of course the other thing to bear in mind is that, albeit the fact some might say, well, it's only a small interest rate, well, at 1% on the size of the national debt as it is at the moment, how many years do you think it would take before the Bank of England owns everything? Because of course the interest can't be repaid. So how long do you think it would take before the Bank of England, and not only them in all honesty, it's the entire banking cartel, how long before the banking cartel owns everything? And I can assure you that the creation of money from thin air doesn't just rest with the Bank of England. We're talking all the banks do this, and I'll be coming on to this in later presentations, alright? They all do this. And so again, I ask you, from a common sense point of view, okay, and even from perhaps a contract law point of view, where is the fairness, where is the equality, where is the balance, where is the consideration that a company can create money by merely tapping it into a screen? It's given license to do this, it's given permission to do this, and only it, yeah, to create money from thin air and get us to repay it in the form of hard labour and real asset. Sounds like a prison sentence, doesn't it? Yeah? So, I'm going to leave you with those questions, alright? And I'm hoping that future presentations are going to shed more light on the subject, because as far as I'm concerned, and as far as the people are concerned, and as far as the government should be concerned, the government can create credit interest-free. So why has it chosen to borrow money at interest when it can borrow it or create it interest-free? I'll leave you with that question. See you next time.